Matt, IBM beat expectations with earnings, and Microsoft is supposed to as well, with one thing in common: getting into the cloud. Is cloud still cool?
Yeah, cloud is. IBM used to move the needle. Their numbers would have been an indicator of what the market could do and maybe technology as a whole. But as you see, their numbers were great, but it was the cloud space that really got people excited. Unfortunately, they're not moving the market like they used to. So I think people are going to be focused on what IBM has to say. There's other companies that are cloud-based. The Amazon, when they mention cloud, that always gets people excited.
Yeah, well, investors like to stay in style too. And one thing oil companies are doing differently is moving away from exploration and into things like renewable energy. What kind of qualities are investors chasing or running away from in the energy space?
Well, you saw yesterday, it was the gasoline inventory number that really drove the market. So it's not just oil. So you have to start thinking outside the box. And I think, in eco-friendly society that we're in, we're getting these companies that are now reaching, as you said, for other alternatives. Tesla has been one. It's really a story of batteries, right, and solar power, and that's what people are so excited about. So, the companies are seeing what people are interested in, and they're going that route. It's also probably a little less expensive too.
That's a really good point. He's full of them, right? By the way, this is Matt Cheslock from Virtu Financial. We just wanted to jump right into the interview. Well, Matt, something that's not so popular recently are passive funds, even like Vanguard, which I feel like everyone and their mother has in their portfolio. Some are attributing this to trade tensions and rising rates. Do you think that gives a lot of credibility to why this is happening?
Well, we've seen over the last quarter, and specifically over the last couple trading days, we've seen real anomaly coming in the market. We've seen individual stocks outperform or underperform their sector. That's how trading used to be. If you loved a stock, you bought that stock. Passive investing got people into that comfort level where they wanted to buy a whole sector. They wanted to broaden their horizons, so they didn't want to miss anything. But we've seen certain stocks, for example, Netflix the other day was down, but the rest of them were up. We haven't seen that type of dichotomy. So, I think that's affected passive investing a little bit. It's gotten a little bit too easy to invest, and I think the returns aren't there that we're seeing. So you can see outsized returns with individual investments.
Yeah, passive investing is not our pastime recently. So Matt, next week, what's on your earnings watch?
I think you're going to continue to watch to see if technology can lead. That's the biggest question that we've heard, is technology's been the biggest driver of market gains. If technology falters, where are we going to get the outsized gains? Financials have already reported they've been great. They had a nice run, a nice bump up Monday and Tuesday. So what is going to be the next level? We're going to start seeing some energy numbers that may take us out of the tech space. So investors could probably be focused on that outside of the tech world.
Well, Matt, thank you for leading us into the weekend. You have a good one.
Yeah, you too. It's always good to be Thursday.